You may know that when buying a house, the seller can help pay some of the buyer's closing costs and prepaids. In fact, they can even pay all of them. But you probably aren't sure how much you're allowed to ask the seller to give in credits towards your closing costs, discount points, and prepaid items. You obviously don't want to ask for more than you can actually use, since any unused credit just goes right back to the seller. So don't flush this money down the toilet by not using it all up. And make sure you know what kind of loan program, occupancy type, and down payment percentage is being used, as all three of those will impact the maximum credits allowed. On a conventional loan for a primary residence or vacation home purchase, you can actually ask for up to 9% of the purchase price from the seller in credits if the down payment is at least 25%. But if putting down 10 to 25% on that same property, the maximum credit drops down to 6% of price. And if putting down less than 10%, the maximum seller credit drops to only 3% of price. On an investment property, conventional loans allow a maximum of 2% of price as a seller credit, no matter what down payment is used. FHA loans are very straightforward. A maximum 6% of price is the maximum concession, regardless of down payment. USDA also has the same max 6% credit, regardless of down payment. And the most borrower-friendly loan is the VA loan. On VA loans, the seller can pay 100% of the buyer's closing costs, prepaids, and up to a maximum of 2 discount points. There is no maximum percentage amount like on other loan programs. This amount can even go towards the VA funding fee. And here's a little known secret that many agents don't even know when writing offers. The seller can also pay up to 4% of price as a credit to pay off the buyer's personal debts to help them qualify for the loan. This is above and beyond the actual closing costs, prepaid, and discount point credits that we already discussed. So they can cover all of the costs and points plus an additional 4% towards payoff of debts. That's right, the seller can pay off a loan for the buyer to help get the buyer's debt ratio where it's needed, but that's only on a VA loan. Remember, the key is to not ask for more than you can use, as that excess money does not get applied to down payment or get refunded back to the borrower. It's simply lost and goes right back to the seller. For more questions on this topic, reach out anytime. I'm here to help.